Good afternoon, everybody. Thank you for joining us for this panel on cannabis and the internet and e-commerce. Delighted to be here with my fellow panelists. I'm joined by Sean Dollinger, the CEO of Namaste Technologies, Peter Gigante, the head of policy research from Eaze, and Michael Arnkvarn, the CMO of Canada MPX. Just to level set the conversation, for those of you that don't know me, I'm the senior research analyst at Cowen, covering beverages, tobacco, and cannabis. I spearhead the cannabis practice at the firm. We've been covering cannabis since 2016, and we're still the only major Wall Street firm covering the space in the U.S. As we think about the market opportunity, we obviously think it's robust. That's why everyone is here. For the U.S., we're thinking it's a $75 billion retail market by 2030, and for the Canadian market, we're looking for $12 billion by 2025. We have not made any assumptions around channel mix because it's incredibly dynamic, which is why we're all here. So it's very much a mixed bag, just by way of background. So in the US, there is some e-commerce, and we look forward to hearing from Peter at Eaze on that. In California. In Canada, it is essentially an e-commerce market, more or less, under the medical paradigm because it is mandated direct to consumer. And then with the adult use market, e-commerce will be available as well. And in fact, Ontario will be e-commerce only when it starts, and that's important because it's about 40% of the Canadian market. So with that, Sean, talk to us about Canada and the global opportunity in e-commerce.
Yeah, so we started in Canada a few years ago. We've seen unbelievable improvements there. I think that the Canadian government's done a really great way, doing it from the federal level and outlining the scope of everything over there. And we'll continuously see it grow. It'll be interesting, like you mentioned, when rec comes into play, the adult use market. For now, the laws have been outlined on the medical side of things, so that's what Namaste has remained focused on. We believe we're the leader in the e-commerce platform. We haven't really seen a movement from the other LPs. They're just focusing on basic Shopify sites. We believe there's an opportunity at hand with the medical side to be able to remove the borders in Canada, because right now it's extremely confusing, even though you bring up on the rec space that it'll be rolled out. We don't know really what those rules and regulations look like, and we're only a month out. So it's going to be really interesting to see what happens on that side of things.
And just level set for everybody, what is your business model?
So we're your everything cannabis store. So we started 4 years ago selling vaporizers all around the world. We thought it'd be a side business selling 2 or 3 vaporizers. That quickly became hundreds to thousands, and we're the largest business to consumer vaporizer company in the world. When we started as a vaporizer company, that's just a hardware specialty e-commerce play. But we've developed a database of over 1.5 million customers around the world, by far the leader out there on that side. But then obviously there's a correlation between a vaporizer customer and a cannabis user. Hopefully in an hour from now, we get our sales license from Health Canada, and we could then roll out this strategy on our cannabis side of things. So even though there's been a ton of competition with vaporizer stores, you see them on every block, we've been able to maintain the growth that we have in Canada. We've doubled our revenue since last year, and we plan on doing that on the cannabis side. So we don't grow, we're the platform. So we're similar to Uber to transportation, Airbnb to real estate, and then Namaste is the platform for everybody. So everybody's our partner, including any people in the business.
That's perfect. Mike, can you expand on that and talk a little bit about what you guys are up to and what you're seeing in the market?
So we're a Canadian company that initially started out with the idea of becoming a licensed producer. It didn't happen as fast as we wanted to, so we decided to go and invest and manage some acquisitions in the United States. We're in 5 states right now, Arizona, Nevada, Massachusetts, Maryland, and most recently in California. And then in June of this year, we did purchase a licensed producer out of Peterborough. So we're about to roll out the Canadian opportunity. We also have a joint venture with an Israeli pharmaceutical company that specializes in cannabis, Panaxia. And we're in the final stages of doing a facility in Arizona for that, for true, what we call true medical, pharma grade, GMP compliant products. And it was interesting to hear some of the comments about true medical products. So we think we're doing that as well. Panaxia is going to establish their North American headquarters in our facility in Owen Sound, just a little bit north of Toronto. So we're doing that. The Canadian market, we find it's going to be pretty exciting. And this whole question about the internet, it kind of, we're taking a different approach on it, and we'll talk a little bit about that.
Perfect. You know, Peter, while we're all like, you know, doing guesswork on what Canada might look like from an e-commerce perspective, you can actually offer real-world, tangible data around that. So talk to us about Eaze's business model, if you don't mind.
I would love to. So, and I have to remember, every time I'm outside of California, most people probably haven't heard of Eaze yet. So Eaze is the technology platform. It sounds like similar to Namaste, where there's a consumer-facing product of Eaze.com, where people can go, enter in their location, find a retailer that's near them, see the menu, learn about the products, place an order for delivery specifically. And then on the back end, we're working with the retailer to provide them software that really helps them with order management, inventory management, delivery routing to make sure that their drivers are going the most efficient routes and make sure that everything is tracked. It's an extension of these, you know, we've heard of seed to sale. A lot of seed to sale programs end at the retailer, and so this delivery component is where we're helping them make sure that once it leaves the store, it's still tracked until it gets to the consumer. And we're doing age verification and just adding a whole layer of compliance and protection for public health purposes, public safety purposes that the regulators are really fond of, so that's great.
And for those of you guys who are not familiar with Eaze, how often are you guys processing a delivery in California?
Oh gosh, so I think at our last Eaze State of the Cannabis report, which came out in January, I believe it was every 6 seconds, which is, you know, it's pretty good. I think we can do better, and I know that we are doing better. The company has grown, which is fantastic. So yeah, there'll be another one of those reports coming out January 2019.
Perfect. And for those of you who haven't seen it, their annual report, which is available online, is very, very helpful. It's data rich and infographic rich, so it's easy to consume.
And that's just from my perspective as head of policy research. You know, my main audience is really policymakers. We try to help them understand what the industry is doing, what we're facing, what the company is doing. But a lot of that is really done through the data lens. And so we have this really unique data set of transactions, and we're supplementing that with consumer surveys and market research, really trying to just flesh out for people what's happening around the cannabis industry.
Yeah, and so I want to ask each of you the same question, and we'll just move down the row. But you know, one of the things that's really interesting about e-commerce is all about curation, right, of the product portfolio. Like, why is your e-commerce platform the destination that consumers want to go to? So how do you think about portfolio curation?
Yeah, so what Namaste is doing is controlling the full funnel. A lot of companies out there don't do that. We control the traffic, then we actually work with partners like Green Lane to fulfill. We use distribution centers. And then we develop different technology, like I mentioned earlier, to help customers go through a process. So we developed the first telemedicine app ever approved by the Apple Store in Canada, where all of a sudden we could approve customers in under 10 minutes and get them out the door with a medical prescription to go ahead and complete their purchase. One thing that we did on top of all that is a journal entry system. So people have heard of it before, where people could record how they feel when they use different products. Well, we take all of those different things together and we feed it into our AI and machine learning company that we bought out of Sweden. We made that acquisition 2 months ago. And we believe that what'll make us different is we're not pushing our own products. We're a platform. We're there to sell everybody's products, but to develop a peer-to-peer network that shares information. So not only will you be able to shop for products by price, least expensive to most expensive, organic, non-organic, but hey, I woke up this morning with a headache. What product in Canada helped X amount of users and recommends different pieces? So it's being updated by the second. We've worked with companies like IBM who've taken a huge interest in what we're doing. Today, actually, we're in Toronto meeting with them, and we're doing things that have not, it's never been seen in the cannabis space. So by providing all this information in one spot, we believe that's what makes our platform so powerful.
So it's value-added, curated content and consumer feedback that really kind of helps inform some of those consumer choices.
Absolutely.
Okay. And then Peter, how do you guys think about finding partners in the California market?
So we've realized that e-commerce is really like a hugely important part of the industry, and especially as earlier panels are talking about the illicit market and how much of sales really are still not making it to licensed retailers. And there's usually the cost component. There's the consumer goods portions of it, which is convenience, cost, and quality. And it's really the convenience part that I think we're really trying to address through Eaze, to make sure that people understand that they have access. And California is an interesting test case in that Proposition 64 passed by a large margin. Californians want cannabis access, but then you also have these local and county governments that still have banned storefronts from their jurisdictions. And so you can't say that you have access if people can't get the product. So I think that the platform that we're bringing is really important to making sure people have access, whether it's medicinal, whether it's recreational, which I hate the word recreational as well. I think what we found in our last report was there's a very small percentage of only medicinal users, people who are really treating a condition, and only people who are using it for an adult purpose. There's really this 80% in the middle that is more of a wellness category where, sure, there's medicinal application, but it's not their only concern. So we just want to make sure that the platform is addressing everyone's needs and that we're bringing access to it. We're working, our value add to the retailers is customer acquisition. A lot of these groups, are not necessarily, they don't have the best practice of how do you bring in new customers when you have such stringent, some restrictions on you about where you can advertise, how you can advertise. Is it cost effective for me to do it as the retailer myself versus going in with a platform? So we try to find retailers who are scaling and are really interested in kind of finding a most cost-effective model, and that can actually meet the demand that we see, and that part of our analytics is really helping them understand what popular products are, how much people are ordering, try to predict for the upcoming month or quarter what they should have on hand for these deliveries. And so far, I think that's been very successful, and I'm eager to see what happens with the regulations. In California, they're still not set. They're still very squishy. So it should be interesting to see the growth of the industry once they actually have a set of regulations that everyone can understand.
That's great. And Mike, you teased that you were going to give us some more detail
So
on your e-commerce.
our strategy is pretty simple, is that we're totally vertically integrated. We believe in branding, our own brands, branding, and we will be able to get this information across different jurisdictions through using the internet. For example, you can't block information that people will see in Canada that comes down from the branding that you do in Arizona for the MPX products or other stuff. The other strategy we use, and I was actually quite pleased with the seminar when they talked about, the panel talked about the jurisdictions that went from medical to recreational, because we're actually considering buying big medical customer lists, and so that seminar kind of reassured that maybe we're doing the right decision, that the medical isn't just going to disappear once Canada goes adult use. And then the third strategy that we use is aggregators. You find groups that are out there promoting, especially on the medical side, promoting the medical benefits of certain, well, specifically our products that we have. And then you will get, they will take ownership of this, and then that will drive them to the different websites. So those are the three things that we do.
Interesting. I'm going to ask a question again to the whole panel. We'll go in reverse order this time. So, one of the things that's being hotly debated amongst the investor community right now is really consumer engagement and how to really bring new consumers into the category. And so, there's a big question around in Ontario specifically, if Ontario is e-commerce only out of the gate and you don't get brick and mortar retail until possibly April, is the industry in a position to really engage that inexperienced consumer? Don't they need that brick and mortar experience and that educational experience at the point of retail? So talk about how e-commerce can facilitate some of that.
So
And the internet.
the e-commerce model in Canada, it's medical and it's totally vertically integrated. And actually, so just to say, when the retail goes e-commerce in Ontario now, it's the government that's running it. So we don't mind that because we don't think that they're going to take any market share from us. It's going to make us stronger as a totally vertically integrated medical market. So I think they're just delaying their decision. It's going to be a little bit different when you go out west. But again, the medical market is going to stay. And that's where the e-commerce for the Canadian producers, that's really where the strength is going to be.
Well, but in medical, it'll be wholesale and direct to consumer, right?
But there's no wholesale in medical.
No, after.
No.
No.
No, the medical program in Canada as it is, it will remain.
Okay. Peter, how have you guys seen your consumer demographic shift? Are you guys really catering to a very sophisticated consumer? You have to wait for that consumer to get the education at point of sale?
The nice thing about e-commerce is I think it hits both. It's certainly, there's a group who may not feel comfortable walking into a local storefront for whatever reason. I've been to a few myself in San Francisco, and they can be intimidating environments. You have to walk in, you stop at a desk, you check in with an ID. It looks very official, and you approach a bud tender, as they're being called, who might be a little bit surly, having to explain to lots of newbies how cannabis works for the first time. So I think that can be a very intimidating experience. And so having a site that you can go to that's educational in its focus, being able to see what products are, what they do, descriptions of them, who the manufacturers are, is really groundbreaking for a lot of people, especially if you've never approached before. You may not know that topicals are an option. You may not know that concentrates are an option. Everything you see on the street might be, joints, and you're like, oh, I don't really like joints. So I think that there's a lot of learning that comes from just having the e-commerce site. And I think it also breaks open for the retailer, actually, some opportunity, because then people are more familiar with product, they're more familiar with the language that goes along with cannabis. They know the difference between a THC content, a CBD content, and that breaks some of the ice of walking into a brick and mortar retailer. So I think initially, there were thoughts of like, well, will e-commerce steal from retail? And I think they're actually very complementary in getting people. There's going to be that core group who's really looking for, they want to go into the store, they want to smell the product, they want to look at it, and so there's that kind of connoisseur level that I think really does prefer maybe a retail experience. But then there's a lot of new consumers who really are just looking for some guidance and are looking for a low touch point because it's less intimidating for them. But once they're more familiar with products and language, then they're ready to go into any cannabis environment.
And Sean, I suspect you're going to agree, but complement or constructive tension between the channels?
No, I definitely agree. One part of the brick and mortar side of things is at the beginning, the smell. I think that's a big thing. But once people know the products they want, the recurring, we've seen what happens to brick and mortar in 2018. We see it across the board. The nice thing about having, and the way that the federal government of Canada is set up, the medical side of things, is their call center and everything needs to be in the licensed producer at the LP headquarters. Cannabis, no matter which way we look at it, it's still a drug, whether it's going to be used as recreational use or on the medical side. And if you're given the wrong advice, it could ruin that experience for the customer. I know I was there the first time I had ever tried it. I had some anxiety back then, and I was given a strain that didn't make it a great experience for me. I think we run into a bit of that trouble with how quickly the industry is expanding, where people might get wrong information at the brick and mortar side of things. So I believe everything happens for a reason. So with the whole slowdown in Canada on the rec side, on when it'll actually be rolled out and being forced to make people still go through the medical channels and really get educated there, I think that there's a lot of value on that side of things.
You noted the smell, which I think is interesting. One of the trends that we observe in the United States is a shift away from combustion broadly. In the states where we have access to sector level data, I think most notably in California, where our data would suggest that it's already 32% vapor and less than 50% combustion. So talk about, one, kind of how you're thinking about product mix, and then how that dovetails into an internet or e-commerce based model.
Yeah, so right now in Canada, they're really only allowing tinctures and flower. Like the environment is very different than what we're seeing in the United States. No edibles. You can't even have CBD creams in Canada. CBD from hemp is still illegal in Canada. Like, there's a lot of challenges there. So.
But ultimately, I mean, 12 months from now, there's going to be vapor, right?
Right. Yeah.
So take out your crystal ball. How do you think the category evolves?
So we're kind of working around that now. So being the leading vaporizer company in the world and having the products, working with a partner, like I said, Green Lane, who has a lot of distribution across the world at this point, and being able to have the latest technology. Currently, we're selling them, and we're again using AI and machine learning. When somebody buys a dry flowered vaporizer, why would you go and throw oil in front of their eyes, and vice versa? If they buy an oil vaporizer, why put the dry flower? So I think that we continue to see the shift on being able to sell products together, and that's when it'll get really interesting in Canada, when all of a sudden you could start selling the actual product as one instead of selling them separately.
So it sounds to me like your assumption is that vapor will continue to be, or well, not continue, it's new, but that vapor will be a share consolidator.
Oh, yeah, absolutely. We see tons of vaporizers. But, our growth in Canada, just to give an idea, we're doing about $5 million in revenue this year just in vaporizers. Last year, we did about $1 million. So the growth is unbelievable. Yeah. And that's the Canadian market.
Peter, your share, I think, of flower is even lower than 45%.
Yeah, it's really amazing to see. And I think some of that has to do with the consumer expectations, like their use case for it. Flower is, by its very nature, kind of a messy process. You have to grind it, put it into a joint, or even if it's already pre-rolled for you, it's going to be sort of intrusive into the space of others once you start burning it. And I think we've seen edibles and vaporizers. They're much more compact, discreet, clean. They're just available for you whenever you need it. There's no real work to be done with it. And I think that has a lot to do with the appeal of it, especially for the audience that's coming into an e-commerce site. It's easy. You don't have to know anything about it. Especially there's a whole category of all-in-ones where you don't even need a separate battery. It's all built in. Literally, you just put it up to your mouth and take a puff, and it's good to go. Yeah. I think that's really appealing to people.
Now, Mike, you've got different perspective because you're a multi-state operator that's vertically integrated. So do you see differences state to state in terms of product mix?
Oh, absolutely. The newer states, the amount of flower versus concentrate is much higher. And then as the products come out, as it becomes more sophisticated, that ratio just goes down and goes more towards concentrates. As a producer, we're obviously more interested in producing concentrates than we are selling flower. It gives you a competitive advantage, plus it's more profitable.
Where are the pain points from an R&D perspective as it comes to concentrate? Where can the industry do better?
Well, so again, if you're in a strictly medical environment, this is the number one reason why we did the association with Panaxia, is to have the R&D behind it, because, hey, we've been at this now for maybe a couple of years, and there's just no way that you can get that expertise or have the bankroll big enough to be able to do that. So that's why you have to do some real association. Somebody was talking about suppositories. Just when you think about it, you want these suppositories made in a very sterile, professional, farmer-grade environment. And that's, so that expertise you have to acquire. And so you either can go out and try and do it yourself, or you can go and get the R&D behind it.
Mm-hmm. Peter, from your perspective, surely you guys get consumer feedback, and you can also see where the mix shift is. Where do you think the innovation is becoming increasingly compelling for consumers and driving a shift in behavior?
In terms of product innovation?
Products, yeah.
Oh, interesting. I think the more we see wellness as a continued sort of theme for consumers, I think that's where we're seeing a huge growth in topicals. People know that there's, it's an easier access thing to just rub on a cream, and if it's really helpful to your condition, that's great. In the tinctures, not concentrate in terms of smoking. I think that's also where like the combustion aspect is a little off-putting at times. You think like, oh, we have this association with cigarette smoking, therefore cannabis smoking might also be considered this sort of like anti-health component. I think there's strong movement and longtime advocates who would disagree with that. But I think for the average consumer, it's like, well, vaporization is a lower point. It's better. It's less harmful to my lungs and to my body. So we're seeing like the concentrates, the topicals, the tinctures, and sort of the vaporizers fitting in better into this wellness category.
Yeah. It's certainly consistent with what we see in the nicotine category. One of the things that we like to say in my franchise is that your experimenter of today is your committed consumer of tomorrow. And if you look at 17 and 18-year-old consumption data from the University of Michigan, the Monitoring the Future survey, you can see that vapor incidence is close to 17% amongst 12th graders on a 30-day basis, where cigarette consumption or incidence is less than 10%. So less than half of what it was just a decade ago. So Sean, back to you then. Clearly, vapor, especially for a younger consumer, is a form factor that they're much more familiar with. Any nuances kind of within the vapor products that you guys see perhaps more from an ex-Canada purview, favoring flower versus dried flower versus oils, and where do you see that going?
Yeah, so when we started in the business a few years ago, it was 90% dominated by flower. For example, PAX Vaporizer, they're one of the number one, or the number one company in the space. When we started, they didn't have even an oil product, nothing to go on there. And today, that now, from my understanding, we're not really involved in the US, but they have their whole product line that's actually more powerful than their flower side. So it's actually split divisions, and that was the biggest company out there. And globally though, we still see PAX as a fantastic seller. So in the UK, where we're the largest vaporizer company out there, in the UK, where we control 90% of the market, we're seeing the majority still being dry flower being sold over there, vaporizers for dry.
Yeah. But ultimately, how do you think about readying your business for innovation that might be disruptive to vapor?
Right, so for us, we always want to look for the latest and greatest, and again, we're the platform. So that's why, from an investment standpoint, and hopefully nobody in the room makes vaporizers, but it's a very difficult space to be in because like what you're saying, everybody's trying to come out with the latest and greatest. It's if you could buy the rights to just the iPhone 10, you might have a good year or two, but after that, if you're not keeping up with innovation, what happens? That's why I like the way we've positioned ourselves. My decision isn't, or my job isn't to decide, does this consumer want a dry? And we want to give them choice. We're not here to force anybody to do anything. So our job is to make sure that we stay aware with all the latest technology, have great partners, and then create the platform for everybody to come use.
Talk about, and I'll stick with you and then we'll go down the row. As a financial analyst, it's all well and good for me to throw out these very big revenue numbers, and I generally don't get very much pushback from investors, right? The sell-off that you saw in Constellation shares, for instance, after the Cannabis deal, no one was calling me saying, oh, Viv, no, I don't believe you. Like, the US is, not a $50 billion market, or the illicit market in Canada is much lower than $7 billion. That's not the debate. The debate is on profitability. What did Constellation just underwrite with a $4 billion check? So talk about the economics of your business and how you extract value.
Yeah, so like I said, just a few years ago, we came out first off with a market cap of $6 million. It went up to $1 billion just 2 days ago in just 2 years. And do we know if Canopy's worth $15 billion? I'm not sure. That's for you guys to do, right? But if you look at our business model versus other business models, I think we're extremely undervalued in the space. We're one of the ones who generate the most revenue. This December, we'll be doing over $4 million in revenue a month. And one thing you guys need to keep in mind is that's not even with 1 gram of cannabis yet. So like I said, hopefully in 30 minutes from now, we get our sales license. And on Monday, we could actually start selling cannabis from all different LPs. Looking forward to a future partner that we got to meet here. And that's what's amazing about this space. There's endless opportunity, and I'm so happy that we're the platform. And next year we're projecting well over $100 million in revenue, and that's not including any cannabis side of things.
Without disclosing non-public information, dimensionalized margins, and what is the attractiveness of the flower from a margin perspective versus your existing platform?
Tried to keep it consistent, whether it's hardware or cannabis. The beauty about cannabis is, as you know, some of these vaporizers come with 5-year warranties, 10-year warranties, and it drives me crazy because that means you're doing all this work to get one customer, and then the accessories are almost a losing proposition once you factor in shipping and manpower on those. But rule of thumb, we try to make 50% across the board, and then we're aiming hopefully for about a 15% net over the next couple of years. If tomorrow you told me, Sean, I want to see profitability from you guys in 90 days, I don't care so much about growth, we'd actually be able to become profitable. We don't have a 1 million square foot warehouse growing cannabis. We have a 6,000 square foot facility that could hold up to $50 million in our vault. If we needed 2 teams working around the clock or 3 teams working around the clock, we would be able to fulfill cannabis all day long. So,
so velocity, better fixed cost leverage. That's the model. Got it. Now, Peter, Eaze is private, offer anything that you can around like how the economics of the model work?
Sure. So I think a lot of people, especially from the consumer perspective, you see Eaze.com as the website, and your products get delivered to you in a little Eaze bag. So people think, oh, they must be making money off of each transaction or through the delivery fees or something like that. And it's actually not true. Our model is based very much on technology fees, technology service fees with the retail operations that we partner with. But we realize that that's where their growth is our growth. And so there's a very sort of synergistic relationship that we have with them of pulling in new customers, enticing customers to come back, try new forms of cannabis. There's a lot of growth opportunity in the state. I mean, yes, there's a long history in California for medical, but there's also now sort of this entirely new unlocked marketplace within the adult use, and that's just in California. There's many more states to go. Who knows? International, very possible. But we think that there's being of service to the retailer is a winning proposition that we're both going to be growing as the market continues.
Now, Mike, for you, you've got 2 different geographic footprints that are going to have 2 very different tax structures. So talk about the economics of your operations in the U.S. and how that'll contrast with Canada.
Did you say that you had a $1 billion market cap and you were undervalued?
Yeah.
Yeah. So.
Undervalued compared to peers in the space.
So we did last quarter 14 million, and we're at 300 million market cap. So I don't know. Anyways, we don't get any respect quite yet, but we're still in a very expansion mode. So obviously, right now we're worrying more about the top line than the bottom line. We're opening up new dispensaries. We have a facility in Massachusetts which is going to be ready to open up now. Again, we bought the Canvita plant in Peterborough. We hope to get our cell license by the end of October. So we're just rolling out, and so we should be on the $100 million rate annualized by the fall.
But as a vertically,
beginning of 2019. Yeah.
Got it.
Yeah, okay. We are in the fall.
One of the hotly contested, discussions around the Canopy Constellation deal specifically was, whether cannabis products can actually generate a CPG type margin. So, that would be, 30% plus. In particular, because U.S.-based investors, while, they might not have visited Colorado or Oregon and seen like how the pricing has evolved, everyone's kind of seen the headline, right? Pricing is collapsing. You're like, well, how do you make a CPG margin in a deflationary category? So, Mike, how do you make a CPG margin in a deflationary category?
Well, again, it's in our case, it's branding, and it's identifying the profit centers that you do. So we want to we do not treat it as a commodity. Again, we're going into the high-end quality extracts. We're going high-end medical products. And the profitability were there. But with all of that said, there's the inherent need to educate. You can't treat this, like you would a Budweiser or stuff like that. You have to educate, and so that's why, we hold seminars to doctors, and we were in the process of developing a whole educational series on private channels that we will make available to the general public. And as you educate and people become more informed, then we think you'll be able to get the extra value.
Okay. And Sean, how are you thinking about the potential for price deflation in Canada?
So again, we're the platform, so we're looking to make our 50% margin. If it's $10 a gram, if it's $15 a gram, if it's $5 a gram, to us, it doesn't make a difference.
And do you think like suppliers are going to be like agnostic about your margin as they experience price deflation?
If they want to be part of the platform, they come on. You know, what's going to happen in Canada, I don't know if anybody in this room's walked through a grow before, like really, and one that I walked through most recent, and believe it or not, it was my first, and no, not my only, now I've walked through a couple others. It was CanTrust in Niagara, and it was beautiful. And I was walking through and I'm blown away, and they're saying that they're expanding here and expanding there, and I'm like, just out of curiosity, like what you have here already, you know, how many grams does it spin off? And I did the math, I drilled them for a few minutes, and it turns out that 250,000 Canadians could consume a gram a day out of what they produce per day out of there. And they're tripling the size there, and Aurora Sky is that much bigger, and Canopy. And I've heard the comparison, and believe me, I'm a believer in this industry. People say more people consume it than wine. I know my wife, I know her friends, and it goes across the board, and a gram of cannabis is quite a bit, you know? So, yeah, on that whole side of things, it's gonna be interesting to see where the whole industry goes. But the point is, our platform, whether Canopy, Tilray, Afria, Aurora, if none of them want to sell on our platform, there's going to be well over 100 new licensed producers coming up in Canada that I'm not sure where they're going to be selling their cannabis. Mm-hmm. And we'll be their partner, and they'll see the true value. So if the big licensed producers have wholesale distribution around the world, and this is just Canada we're speaking about, I hear grows in South Africa that are going to be 10 million square feet, and all of these unbelievable. Yeah, so so that's why we're the platform. There's going to be a lot of opportunity. If people want to be part of it, fantastic. We've shown it in the vaporizer space, where, like I said, there's stores on every block, you know, pretty much, and tons of competition on e-com, and we still manage to take 90% of the market share in countries like Australia, where it's not even legal, you know, from a medical side. So.
And you raise a good point around those smaller LPs, right, who might have a challenge getting into the crown corporations. So
yeah. And then don't forget the whole marketing side of things as well. There's some power. Like, again, for people who aren't familiar in the Canadian market, you're going to walk into a store, and there's not going to be any placement. It's not like cigarette packs that look different or anything like that. You're just going to see white bottles. And something that I don't know if we have time to get into, but we did a deal on with a company called YPB out of Australia, and they have QR technology and augmented reality and everything like that. And then all of a sudden you could put your phone up against these products, and then we create an experience in the store. But there's steps required there. Even though we're going to have an unbiased platform, we will have partners that we work with that could get better placement. It doesn't mean that when feedback comes in that we're going to change the feedback. But there's power to that online, that you'll be able to do things a little bit differently than just the other way.
Yeah. Peter, your experience, I think, in California is probably really, really unique because the market has been developing in kind of fits and starts, which has prevented a lot of price deflation. But how do you guys think about that outlook going forward, and how would that impact your business model?
Yeah, California is a really interesting test case where they've had 20 years of a very successful medical program. January 1st hits. Licensed businesses are waiting months to get their licenses approved. They can't sell anything. You still got all your overhead. So literally the entire industry was just turned on its head. Now the big bottleneck is around testing. Everything has to go through new testing requirements. There's very few testing laboratories in California that can actually do this. And so I think, yes, there's been these sort of like artificial shortages that have kind of kept prices up, but what's also keeping prices up is, and this is where I think consumers are very sensitive, is in the taxation. I mean, California has extremely high tax rates, both at the state level, and then there's localities that are adding on to this. This was part of our last Eaze Insights report, was looking at what is the illicit market like. Are we pushing people further away from licensed businesses by having this overall cost structure? And the price of product will fall, presumably because of grow operations. But even then, I'd actually be interested to see if the growers are organizing themselves, around sort of a commodity structure to try to protect against some of the natural competition. I don't know if they'll be allowed to, but I guess that remains to be seen. But then on the taxation side, we know that, and there were 2 studies, I believe, just within the last few months out of Canada, looking at the price sensitivity specifically, and knowing that at high cost, people are definitely going to go back and look for alternative sources for their cannabis. So I think that's a bit of a worry for the entire industry. Certainly, other states have fared better with lower tax rates. But I think that's where, when you were talking about how can you maintain margins, I think there's room for margins if the taxation rates aren't sort of putting cannabis out of reach of the average consumer. We're seeing that we're kind of teetering on maybe a little bit too much, and people are still 1 in 5 making illicit purchases in the past 3 months.
Right.
So that's a big chunk of the market.
Yeah. Those high price points are painful for consumers that have kind of been trained to buy in the illicit market. For each of you, as you think about kind of your business evolution over, let's start with the next year, because I have a bigger, longer term, big picture question I want to ask. But in the next year, what are going to be like the biggest areas of potential disruption to your business? And Sean, I'll start with you.
Can I start down there?
Okay, sure, Mike, go ahead.
Disruption?
Yeah.
In what sense?
What could disrupt your business plan in the next year?
I don't know. It's
well, I think news like
getting
that
bought out.
happened yesterday,
Yeah.
out of nowhere. That's going to be the biggest thing. And this is what I talked to our team, our CEOs here today, and he could say, no matter how crazy the share price goes, no matter what happens, we've got to keep our heads down and focus on the business. And we know what we know. That's why our whole focus now is medical. We believe that currently there's no difference between a medical consumer and a recreational user in Canada. In Canada, they're not going to allow importation on the rec side, so we're going ahead and using our technology to convert people into patients. Once they get that license in 10 minutes, all of a sudden, what happens if there's an international strain from Jamaica that's absolutely amazing, or from Israel where they've done unbelievable research? On the rec side, you'll never have access to that in Canada. On our medical platform, you will. So these are the different things that we're thinking outside the box at Namaste. If you guys look more into what we do things extremely different. But the biggest things that'll happen, people want to see this space go down. You have all these challenges. And just yesterday, it was the most ridiculous one yet, where Canadians coming in who actually own shares. So I get it if you pull up to the U.S. Customs officer with cannabis, in a vaporizer, I get it that you're in trouble. But because you've invested in a regulated product, that the NASDAQ has actually accepted a company, and now you're going to, we're dealing with a product that is legal in certain states. I understand it's still technically illegal because of federal, but things like that I think we haven't seen all of it happen yet, until the federal government here in the U.S. finally comes out and says it's legal.
Yeah. Well, considering how unpopular my last question was, maybe I'll turn to the audience for a couple of questions. Please, in the middle.
Every panel today has mentioned that there is a synergy between medical use and recreational use. You mentioned it's at 80%. Is this new data, or is this part of a conversation that gets broken down? I guess my question is more to the states, that the states have to play this game of separating between medical and regular use. And do you see that changing, since all the data from every group is identifying cannabis use is for general well-being? Will this come into play in the future?
I think we'll see a greater separation. Right now, for example, in Canada, veterans are the only ones who are covered, right? It's very hard to have separation. We get contacted because we're a platform, and let's say a union then puts in a policy that they'll cover cannabis for their union. If they just do a deal with Afria, then everybody's forced. At least on our platform, they have choice. So we're seeing more progress on that side of things. We also see, and for you guys who don't know, due to compassion reasons in Canada, there's a lot of illegal online dispensaries that operate out of Vancouver. And they believe on October 17th, and we've been meeting with a lot of them, that their business will be shut down and that the federal government will be coming hard on them. And again, we're going to be using our tech. We're the only ones out there that could overlap our back end on their front end to then convert all these customers who've been getting their cannabis illegally in Canada and then bring them into a structured environment. So I think that as we see this progress come out on medical and recreational, you'll see a bigger divide on what will the insurance companies actually provide coverage for, and I think that'll help the industry grow even more and perhaps get the prices that our friends need who are growing and bring some control.
But maybe to answer your question also is that when you talk about medical, so when we go and talk to people, when we talk about medical, we're talking with doctors, and we're talking about the benefits, and we have to realize that a lot of the whole legislation is based with politicians. They want to be popular and everything else. So on this hand here, we're talking to doctors, we're talking about all the benefits of it, and then when we go and talk about adult use, well, we're drug dealers. And so that's why there's always the leaning towards the medical side, especially politically.
I would agree it's political primarily, and I think a lot of that is based on the constituents. I mean, I think we've spent the last century telling people how terrible cannabis is, and it's the devil's lettuce and things like this. And so you end up, if you've seen recent polling, like there's more support for cannabis than ever before, which is great. But still, there's a very large divide between what people think about medical cannabis versus what they think of in other cases. They think like, yes, if you have a medical condition, you should absolutely have access to it. For everyone else, it's a little bit more squishy. It's still the majority of people, but I think that's where politicians have found that the polling gives them more freedom to say yes to medical, maybe treat adult use in a different way that's less consumer friendly.
Is there one in the back? Yep.
This question's for Peter. Peter, as head of policy research, what is your expectations for the federal government to change their stance? If you had a crystal ball.
I mean, I think anybody making predictions about the federal government these days is really just shooting for the moon. But I do think that there's been a lot of progress on both sides of the aisle, which is very promising. There's a lot of bills that are making incremental steps. You've seen the bill even just on research. Like, you can't do research in the U.S. right now effectively and efficiently because of the Schedule I designation, and yet we're still talking about its treatment for PTSD for veterans, for instance. So I think that there's enough of a meaningful interest group that both Republicans and Democrats care about that you'll see some cannabis movement forward. But as far as full legalization, I wouldn't even speculate until after the midterm elections.
Just wake up in the morning and watch Twitter.
Mm-hmm. Yeah. It'll just be tweeted someday. That's how we'll all find out.
Yeah, so personally, I believe that it's very bullish. Like I mentioned a little bit earlier, there is going to be an education that's needed at the start. We're seeing it a lot in the U.S. where some of these MedMen and type come up and they're doing a pretty good job in rolling it out and educating. But I think once the user, especially in Canada, right, it's cold half the year and people don't want to leave the home. And if you know that every week you're going to get a parcel, and we have a bit of an advantage. Our overhead's not much, including free goodies in there, including a vaporizer with free accessories. Brick and mortar costs a lot, especially in Canada. Minimum wage keeps going up, then unemployment insurance. And that's why we keep seeing this move towards e-com, and I'm very bullish on.
But if you're talking about e-commerce in the United States, the whole key to e-commerce is processing. If you can't get paid, you can't sell. And you can't even get credit card processing in a dispensary, so how are you going to get it on an e-commerce platform? So until,
we'll get over that.
Yeah, but once you get over that, then that's the way it's going to go.
That's the question.
Yeah.
We know there's problems in the middle. We'll get rid of that.
Yeah, no, but that's the whole, I mean, an e-commerce site that you cannot get paid for is worth nothing.
When you can get paid, what does it look like?
Well, but you say that, there's beauty products that contain retinol that you can't even get credit card processing for. So we're still a step away from it, like it's really archaic. as far as that is the whole key.
I couldn't agree more, but I would love to hear what you have to say.
The future of e-commerce and how this all plays out. I mean, I think growing as we go forward, consumers are getting more comfortable with the idea of cannabis, and that's like step one, is just giving them information, because we spent a long time giving them misinformation. So now we have to kind of make up for lost ground. And I think in addition to the e-commerce aspect, the thing that people trust the most and that really changes minds is opinions of friends and family and experience. And so I think as more consumers are willing to try it for themselves and willing to share it with their friends and family, you see like, oh, actually, this is not the scary thing that I was told it was. It's actually very mundane and mild, or helpful for my maladies or whatever. And I think that's where all of a sudden, yeah, sure, e-commerce comes in to just make the whole process easier. And so I think it's two-pronged. The one of getting customers just familiar with products and making it easy for them to try for the first time, and then also creating an environment where people are talking about it. And I think there's still just a big novelty, especially in the US, of being like, oh, have you gone to Eaze.com? You should take a look and just see what they have.
And people love sharing in this space. Like that, like it's normally people are like, well, what are you paying people to share this information? Like on our Uppy, just to give you a quick, in the first 2 weeks of releasing it, it had as many downloads as Facebook had in its first 2 weeks, and we just released it a few weeks ago. And the amount of data that we're collecting, and then going back to what we spoke about on the medical and rec, and how we can't even do proper research right now, and then how many years are you going to be waiting for research reports come out and doctors. And so on our peer-to-peer network, like I don't normally get personal, but I suffer from gout. I've suffered from it. For anyone who doesn't know, it's crystallization of the blood. I started using Charlotte's Web, which just came out public. I believe that their products are fantastic. And I started using the topical, and 2018 is the first time in 8 years I haven't suffered from an attack. And I'm the first one to share it, and a few people in this room might have gout, and then they'll pull me aside after. And again, before starting to speak about stuff, before cannabis, I would have never come out. I keep that to myself. Mm-hmm. And that's what we continuously see. And people will be like, this is how it's changed my life. This is how it's changed my life. So while we're waiting for the doctors, because I guarantee you, I'm being recorded, you're going to see there's going to be hundreds of benefits to cannabis. And then how do we decide, is this person taking it for rec, or are they taking it for medical purposes? On our platform, we'll be able to share it immediately with people. As soon as we get our sales license, all of this goes into play, and everybody could become part of it. Every person in this room, the world.
All right, we're going to close that out there. It's interesting that, we talked about banking and the challenges of banking, and everybody knows about the challenges of banking, but then I feel like we forget that there's an enormous challenge with internet and cannabis, and we all forget that. And I think that these guys really explain to you how many challenges they are, but also how they've been able to rise to the occasion. So thank you, everyone. Thank you, Vivien, for moderating.